Hello guys, welcome back to another lovely trading video. Sorry for my voice in this, I think my voice is going, so if I sound weird, that's why. So to get straight into it, we're going to be doing our analysis on Netflix today. Reason for it is that I think it's called Squid Game, which is one of their new shows, has been all the talk right now. So a lot of people may be looking into Netflix stock, and may be wondering why it's high. That may not be the reason it's actually so high, but it makes sense to still do an analysis on it. First thing I want to point out is actually using a max time frame. So since its IPO back in around 2000, we have kind of had this consolidation here from around June all the way till now, and as you can see, we've since kind of broken out of this area, pulled back, retested, and we're starting to close out, which could indicate a higher move forward if that's what you're looking for. But now we'll do our normal analysis on this. We can actually delete this. And firstly, as always, look, is there any gaps? And we can see that on Netflix, any gaps that kind of were here, you can see have all been filled, as you expect with gaps to get filled. And Netflix has created quite a lot of gaps in the past year, but have all been filled. So there's no gaps currently to look at, unless you kind of consider this gap back down to 603. However, I never look at these gaps as much, for the main reason being they're not as noticeable to all traders. So you'll see like gaps like this is obviously very noticeable. Even gaps like this are noticeable. Whereas this one, it still counts as a gap because on the 4th it closed at roughly 603. Opened up at 606 and hasn't since come back to fill that gap. So it does count as a gap, but it's not something I would always be looking out for properly, just because not as many other people will also be looking at that. So that's just personally my thought on that 603 level. Yes, you'll probably get a bounce there, but I wouldn't be looking for as big of a bounce as we usually would on proper gap fills. So for this, then we're going to go just straight onto the standard deviations and see where we should be seeing this. And firstly, what should stand out to you right away if you do watch my videos before is that Netflix is right up to the third deviation on both the 4-hour and the daily. So this does indicate that we are quite overbought and are expecting a pullback in the near future. And it's kind of good to see this because we haven't had one of these recently, because market's been more pulling back. September was the first month we've closed in the red, or the overall market's closed in the red, I think since the pandemic. So it's good to see some stocks starting to kind of push out and come into these overextended ranges. So on Netflix, our key short and or lock-in profit zones will be around 650 to around 653. But on this, I would be looking to maybe either short or sell a bit before coming into that level. So by that, I mean like 648, 649. Reason for that is I wouldn't be surprised if we get a strong sell-off at 650. Now, why do I say that? 650 will be a big psychological resistance. It will also line up exactly with the daily chart third deviation. So I can just see quite a lot of selling pressure coming in. Also, what you'll notice is whether you're using the 4-hour or the daily, one thing that will stand out to a lot of traders and or investors is that Netflix is pushing up on divergence. So obviously we have the RSI down here, we can see it's created a lower high as of now. However, price is obviously making a new high. Usually when you see this, it usually indicates that it's moving on weaker pressure and isn't expected to obviously continue, and you can sometimes look at this as a reversal. Doesn't guarantee a reversal, but just again another indication that there may be one. So that's one thing I'd just keep keeping an eye out on Netflix, is there is also a different divergence on this higher move. So 650 I would say is that kind of key level that I would be looking to get short, and personally will be trading that most likely with some options. Now, what other zones will we be looking at, just in case Netflix does break through, which obviously isn't impossible? And that's always a problem with trading at all-time highs. Sometimes stocks are maybe at 52-week highs, and that's fine, because if so, then you can go back into a max term time and kind of see where levels may be. But on stocks where they're all at all-time highs, you can't always be sure that they're going to pull back at these deviations. Yes, there's a high probability that you get at least a large pullback, but you need to also think that if a stock's at all-time highs, there is no like physical resistance where people will plot and be like, okay, here we're going to get a double top here, we may pull back, and that kind of stuff. Whereas when you're at all-time highs, there's no really sell levels. So a lot of people, so there's usually not a key area where a lot of selling pressure comes in, and that's why you tend to see when stocks go through all-time highs, they don't tend to get large pullbacks all at once, and you'll see it usually happen after a day or two of maybe mild red days. So that's the key thing to be looking at when a stock's breaking out to an all-time high. So what other levels will we be looking out for? So as always, deviation levels is all we really need to be looking at. And so firstly, keep an eye out these 620 to around 617, which is second deviation on 4 hour and daily. Those won't be trading them. Reason for that is we haven't yet hit 650. If we hit 650, then those will provide small bounce opportunities. Otherwise, I wouldn't be touching that level unless we hit that 650. So depending on when you're watching this, or just keep note in the future, if it hits 650, or to be safe, 650 to be safe, then these levels will be safer to trade. Otherwise, they're considered high risk, and personally not something I would trade. The 585 will be a bounce level, more likely than not. And the kind of bounce we'd be looking for on that would be to around $600, so roughly a $15 bounce we would be looking for. And then obviously as it continues down, if you're maybe short, where would you be looking for price targets? Statistical means usually a good area if you don't want to be in the trade for multiple weeks and or months. But what you usually see if you look at any chart or any stock, they do swing moves. So by that I mean obviously Tesla's coming out to hit this third deviation, and usually what you'll expect to see after this is a large sell-off. So you would almost guarantee that it will come back to the statistical mean at some point. And usually what will happen, you would expect it to go actually past the first deviation and maybe even down to the second, because when usually stocks become overbought, they then tend to get oversold, and that's what you'll see on it. Really any chart where you see an extreme move to the upside, you'll probably see an extreme move to the downside, and the other way around. So that's a key thing to be looking at if you're looking maybe to get short with let's say options and or shares. If you're looking to get out of the trade relatively quickly, within a weeks, or probably just less than a month, first deviation and or statistical mean would be a good shout. However, if you're happy to be holding for maybe multiple months, you could be holding out to the first deviation on the downside and or second deviation, because it wouldn't be unlikely to see it down back at those levels at some point. So yeah, in hindsight, or not in hindsight, just mean in any sight, the key levels obviously are just these deviation levels. So I'll zoom in just so you can see those levels. If you want to screenshot them or anything, you can see them quite clearly there. There's nothing else we're really looking at for NFLX. It's when it comes into 650, I'll be looking to get short on it. And personally for me, I'll be looking in some profits around 620, and some more at 585, and then probably the rest at statistical mean. Now, I'll quickly just walk through what I see actually happening with the stock, how I expect it to play out, just so it may give you some more clarity on how I'm going to be trading the deviations. So I would expect it, we would do it on the daily chart actually, because more people will probably look at that. Obviously we came into this level, pulled back, retested, and now have broken through. I expect us to come to 650. 650 I do think will be the top of this move, and will most likely be the reversal zone. I think it will come down, probably get a small bounce off this 620 area, come up to around 634, and then break down further to around 585, get a small bounce probably to around $600, continue further down to around statistical mean. Once it comes into statistical mean, it's a bit more of guess who. Usually when stocks become oversold, they will continue down further and become oversold. So I wouldn't be surprised to see it continue down, but when it comes into statistical mean, it's usually when I take my position flat, because I want it to pick a side again before retrading it. So I hope you enjoyed the video, hope to see you in the next one, and that's it. Peace.